us. Now, we just had a long and substantive conversation about the markets. It seems to be bulls are abound. Are you?
Yeah, it's hard not to be. I mean, we had a great conversation to start the show. I look at next year, Scott, and I try to think, can the markets continue if we take away two of our big headwinds? And you touched on it in both cases. If we lose the AI trade where it's rising
Tailwinds.
tides, lifting all tech trade, and if you lose a dovish Fed, can the stock market move higher? And I think it can. I mean, I think if the growth holds up, which it should, and if earnings are solid, that we can still have a good year with a little breadth to the market.
Yeah, I mean, first of all, I don't know who thinks we're going to lose the AI trade. Well, like, what are the prospects of that? And you really believe that if we somehow lose that, and there would be a reason why we would, quite clearly, that the market would be able to overcome that?
Yeah, let me be a little bit more clear. I don't think we're going to lose the AI trade. I think we're going to lose the all-in AI trade. I'll give you two examples. One, we took a position in Micron last week before the print. And that stock, I mean, yeah, thank you. I mean, it couldn't have been better. And the opposite end of that spectrum, from our portfolio specifically, we've been liquidating Oracle over the past month because it's been like a little bit of a tale of two different markets. And what it means to me is, and Adam said this, it's a stock picker's market. So I don't think anyone watching the show should think when we talk about breadth or a broadening market, in no way, shape, or form does that mean you want to abandon tech and think that the trade's going to be a pure value play. I say that humbly as a value manager. I just think that there's opportunities that we need to be a little bit more selective, as we always are, across the board in 2026.
Sure. I'm glad you mentioned Micron, because there's a note out today that I thought was really interesting that basically says earnings expectations in everything away from tech are pretty elevated. Now, would you place your bet on those expectations being realized? Or did Micron just prove to you that the best earnings growth is and will continue to be in tech?
Okay, I think it's still going to be in tech. As much as I want these other things to come up, as much as I love the RSP versus SPY, and we're seeing it outperform in December, we have not seen that trade stick. Like, we run into that direction and then everybody just abandons it and goes back to the Mag 7, 8, 9, 10. So you want the heavy lifting to be done by the right tech stocks. People will always pay up for innovation. How could they not when we look at the AI landscape? But I think that there's other trades out there that are going to be very profitable, like we saw this year in financials, industrials. Maybe next year it continues to be consumer discretion and materials kind of thrown into that mix to at least help do the heavy lifting. But I know that there's lots of talk about, is the AI trade over? Do we need to go elsewhere? And I don't think that should be the conversation, nor should it be the expectation.
You continue to believe in gold, and you added to AEM yesterday. Tell me quickly more before I let you go.
Yeah, real fast. I mean, look at this stock. It's up 130% year to date. It's been one of our top picks. We still believe in the momentum trade for gold moving forward. This way you can own a miner instead of the commodity. Great margins, a little bit of a dividend, and very, very amazing free cash flow here in this name. We're up huge on it, and we still believe in the trade so much so that we're adding to it.